Welcome back to Making Money Matter, ladies and gentlemen. Today we're going to make gold matter. You know me, it's one of my favorite commodities. Gold price, I want you all to pay attention as well. Now, this is Kaiser Reef. ASX code is KAU. And Jonathan Downes is the managing director. And I want to do some fun facts. Now, first of all, they only listed, I think it was 28th of February 2020, I think it was, Jonathan. And that was just before we had that big shutdown of everything. So I think Kaiser Reef has flown a little bit under the radar. So I want you guys to sit up and take some notice. They've got the A1 gold mine in Victoria. And this gold mine was discovered in 1861. Some fun facts for you. 160 years of almost, a couple of little blips, but almost 160 years of continuous operations. The average grade of this mine is 25 grams a ton, which is crazy. And it's been Kaiser's since 2021. So I've asked Jonathan to come on, tell us what they're doing. They've recently done a capital raise, which is a little bit different as well. We want to do the numbers and we want to give you, our beautiful audience out there, a reason to sit up and take notice of Kaiser Reef. So Jonathan, great to see you. Welcome to Making Money Matter.
Thank you very much, Kerry. Appreciate the opportunity.
Jonathan, first time on the program. So if you could just give a summary of, I guess, not only who is Kaiser Reef, but I always say to our audience that look at management as well. So tell us, about the list, because you're not that, you're young. You're listed in 2020. Yeah, 2020. I was about to say 2021, 2020. So not that old. So I want to know how you picked up the project and what are you doing and who are you?
Yep, sure. So we picked up the project through an administration process. Following quite a protracted episode for the previous operators, and that was great. We got it clean effectively, and allowed us to launch into it. And the mine's actually been under a 40-year journey to get to where we are today with previous operators of mining through these historical workings that the old timers had mined, and this mine's been treating the remnant material, the stuff that's been left behind. And that means we're full of compromises in our previous operations, and that includes where you put your tunnels and your declines. They have to be a safe distance away from old shafts and railways, and they're not optimal from a modern mining perspective. And the grade we've been taking is remnant material. It's the leftovers from the old timers. In the last 3 years, our head grade has actually been 11.5 grams per tonne. I think that's the highest grade in Australia. So not bad for leftovers, but regardless, we're right. We've really put the tunnels all the way to the bottom of this operation, and now we're facing up to where the old timers couldn't get to, and they couldn't get there because of a lot of issues in that sort of historical time. It's very hard to ventilate the mine at that depth. They would do an ore blast, and it would take 3 days for the fumes to clear so that people could go down. So that's a terrifically long cycle of mining and then waiting and then mining and waiting, and they had water pumping issues and all those sort of things, which are all dealt with modern equipment very easily today.
You said just a moment ago that it came out of administration. So I want to know what attracted you to this project. It's because I kind of, what strikes me as well, if it was in administration, was that bad management? Did they not understand the mine? What happened last time, and what are you going to be doing strategically to, I guess, to give shareholder value?
Sure. Yes, it's a very complex matter, and it was driven by very low gold prices at a time. There was a real fall off in gold. It was the same period that Gascoyne and Blackham and a lot of other biggest WA gold companies were falling over. It was a very, very tough period, and they had, I won't say how other operators operate, but they'd worked themselves into an untenable position, and when they came up against a brick wall of a collapsing gold market and zero investor interest, it was a tough time for them, and they too were on that journey to try and get to where we are now, to open up the virgin material. As you said, the historic grade was actually 25.9 grams, and they had a 3 gram tail in the processing as well, because they used a big mechanical stamps, putting ore over copper plates covered in mercury to get the gold. So they left 3 grams of gold in the tailings. So if you back that in, you're talking about nearly a 30-gram ore body, and that's what we are now facing, that continuing down. We've done some drilling, we've done some deep drill holes into it, and we've got some fantastically high grades, some exceeding 79 grams underneath our feet. So we know it continues, and we've just done a $5 million capital raise to open up and build a focused team to express our way into this virgin area, where we expect to very significantly increase our production rate with a modern network, and also hopefully we're going to see those grades rise back to something closer to historical levels.
Why do you think the market hasn't recognized you? Because I think from memory, your market cap's about 30 mil. Now, I want to point out to our audience as well that you've got, first of all, you've got a mining license, correct? Tick.
Correct.
You've got a processing plant which is not at capacity. Tick. 30 million market cap. What are we missing? What's the market missing?
It's been a very tough market for gold, and we've been very inward looking in focusing on developing the operations rather than out beating the drum and marketing. And we're about to change that, because we've achieved that long-term goal that we've been seeking to achieve. We've reinvested from our operations and cash flow. We've reinvested $24 million into capital to get us here. We've upgraded our power and our ventilation. We've taken these tunnels and worked our way through the mine to get to the Nova deposit, which we call the new virgin lodes.
Yeah.
And I think now is the time to really try and put ourselves on the market and on the radar.
How deep are you, this virgin lode, because you talked to us about this is remnant mining that you've been doing, and it's given you some cash flow, which is good. You got quite a tight capital structure, also good. How deep is this? How difficult is it, this new Nova lode?
Yeah, sure. We're actually over 700 meters down already.
Wow.
And we have fantastic, geotechnical characteristics. It's a good operation to mine in. It's this sort of a diorite pipe that's come up, and it makes for a very solid operating environment for us, a safe operating environment.
Okay.
And we have already got the fleet that we need. We've been building our mining fleet, which we own. We've actually added quite a lot of remote control capacity to our fleet, and we've really been preparing the operation for the expansion of our production rate. So we're pretty much there.
Okay, you mentioned a moment ago about the capital raising that you've just done. Now, that was with a company called Ragnar Metals. How did that come about?
That came about from a series of meetings with various parties on looking how best to finance the final push for the company. And Ragnar were a vehicle that had a business that had just sold an asset to BHP, so they had a lot of cash, and they were looking for value-adding investments. And after a process of due diligence and mine tours and really getting an understanding of the business, and I can't speak for them, but I believe they see the upside in the operations. And in addition, to minimise dilution, it's always a balance. To minimise dilution to our shareholders, we were able to do a placement at the current share price, which is 15 cents. So that was a fabulous outcome in what is still quite a challenging market. And
a bloody good outcome, Jonathan. Most cap raises I see, and I'm not sort of beating the drum here, but I'm saying a lot of them are actually done at a discount. So yours was done at market price.
That's right. Now, we did give up. It's a little unusual. We gave up 1.5% of our net smelter royalty, which is, I bet, essentially we give up 1.5% of our gold. And last week gold went up by 1.5%. So it was covered in a day's trading, and the gold price, in my opinion, looks like it's going to continue to go. So certainly something that we're not wasn't an overly heavy burden for the company to take on, and I think it will deliver a great additional return to Ragnar investors as well, because it is Australia's longest running gold mine. So what a safe bet to get a royalty out of that, you would imagine.
So just talk to us about this investment. If you like, $5 million raised, 15 cents a share, no discount, two tranches. Just explain that for us so we get a better understanding.
Well, I think you just summarised it very solidly.
What are you going to be doing with that 5 million?
So that 5 million will, our number one cost at the mine is labour, and because we have the existing mining fleet, what we are going to do is just build on that a little bit and get a separate team to build a access to the deep levels, and not just reach it, but we have to then put the tunnels through and develop it ready to stope the ore out and get it into production. So that will take us up to about 8 or 9 months to start opening that up. And from that, we start to get the revenues. And we've certainly, from the drilling, we see a lot of visible gold. We're seeing a lot of visible gold in the mining right now, actually. So we're seeing, which is a rare thing in gold mines, in fact, to actually see so much visible gold. It's very coarse grain gold, and those reefs continue. So we'll be opening those up, and we'll be trucking that to Maldon for a processing, where our processing plant's operating at about 20% of its capacity. So if we can increase our production rate there, our unit operating costs fall, and that makes a bigger margin on every ounce of gold, and of course more gold makes for an even bigger margin. So we're looking for really quite a turnaround for the company.
You talk about the processing plant, the A1 mine. I know that you've got another project up there as well. Talk to us about how far away, how do you get the ore from the mine to the processing plant? What does that, is that trucking distance?
Yes, that's right. We have a group of trucks. We call them B doubles, mostly, and they take our ore every weekday in the mornings from the gold mine, which is south of Mansfield, and we truck it over 300 kilometres to Maldon, to our processing plant. It is quite a long haul. It costs us, if you do a calculation, it's about a 0.6 grams per tonne of gold in cost in trucking it. I like to put these things in sort of a context, and I think the last 3 years of production, our head grade's been 11.5 grams. So 0.6% of a gram, I think, is almost an inconsequential cost or out of that operation. Obviously, it would hurt a 1 gram big bulk mining operation to truck that distance, but for us, it's not a big deal. And we take that to Maldon, where this processing plant, we've reinvested a lot of money there to bring that up to modern standards. We've just installed a new process logic control, so a lot of the plant is automated, which reduces the number of staff, improves our throughput rate and startup times and capacities, and it's got a lot of flow through benefits. And we'll probably get onto it later, but nearby there, 2 kilometres away, we have the Maldon Historic Goldfield, which produced 2.1 million ounces of gold. So a huge gold field. It's in between Ballarat and Bendigo. And I think another fact that's completely lost on the market is that sits within a granted mining permit. And one of the conditions of that mine is that we process ore from there every year. So when people ask me, is it really permitted to mine? Well, it's actually a condition of the license that we process from that license. So it most certainly is. And there's a big decline, which would probably cost about $20 million to replace, that goes right through the historic workings to give us access. We keep that dewatered, and we keep the ventilation going, and that water is potable water it goes to, or stock water. We send that to 35 local farmers. So we're
Oh, I love that.
important part of the Maldon farming community.
See, I told you, ladies and gentlemen, mining and farming, they can work together. Is your focus though right now on the A1? We'll talk a little bit more about Maldon, but it seems to me, did that come as part of the package when you got the Kaiser? Oh, sorry, the A1 gold mine. Was that Maldon part of that?
Yes, it did, and to be honest, the property was quite heavily bid for and sought after because the Maldon mine it's got a lot of analogues with Fosterville. It's not your Saddle Reef system of Ballarat and Bendigo. It's much more big shoots of gold that have been remobilized by a cooked up granite coming up underneath, and because it's I think it produced 2.1 million ounces of gold at 28 grams per ton. It's a fabulous opportunity, and it's got a lot of deeper drilling that continues. But I think most people would have said that the Maldon mine was in fact the prize. But our focus has been on A1 because it's in production. We've got the staff, we've got the operations, we've got the fleet. And we're going to turn that into our cash generating monster, and then that'll drive the big one and hopefully get us up to the 100,000 ounce sort of eventual target that I think a lot of juniors gun for.
It's interesting, actually. So, from your point of view, Jonathan, are you in lockstep with shareholders? In other words, are you saying, look, what is the best way for us to do right by shareholders? In other words, let's get A1 going. Let's make that a bit of a cash cow so that we don't have to continue to dilute shareholders. Was that the rationale behind that?
Absolutely, yes. I think it's a very sound business plan. If we went into Maldon, look, it's a fabulous long-term story, but it will take a little while. It will cost money. It will be dilution, and you don't get dilution back. So, we will. I think our vision is to try and absolutely minimise that and try and do as much as we can from revenues derived from A1. And when we get that singing, it should be ample.
Do you think the market even recognises that you've got the Maldon mine at the moment, or do you think they've forgotten about it?
The company hasn't been heavily marketed, as I said to you earlier. We've been inward looking and focused on operations, and I think that now that we've actually achieved that 40-year journey to get to the bottom of the A1 mine, and I think things are about to turn, and the business is about to actually grow and be what we've been targeting. Now is the time for us to try and put the business on a map and bring people up to speed with what the opportunity is. Certainly, I don't think many people understand or recognise what Maldon is or what the A1 could deliver. So we hope to turn that around.
Okay, can you summarise that for me? There's two things I want to try and get before we finish up, and then I'm going to ask you for 3 reasons people need to sit up and take notice. So you're on notice, and I'm going to ask that at the end, but if I'm looking at it right now, I'm talking to you at the end of May. Let's say it's the start of June. What's the process? What are you going to be doing between now and the end of this year? What steps? What's the added value that you're going to give shareholders as we go towards the end of 24?
So the focus will be, and we'll try and generate as much news flow as the milestones fall, will be to get that second team operating and focused on opening up the Nova deposit.
Okay.
And one of our new directors, Brad Valukas, he's ex-Northern Star and was you'd almost call him a commissioning and troubleshooting mining engineer. He's sat down with our team and worked out a modern mining plan. And we took a clean, fresh view, a fresh sheet of paper to this. What should this mine be doing? If we weren't trapped in all these vagaries of historic workings, what should this mine be doing? And we came up with a number that I was pretty surprised about. But then it is a special mine. It's been on some of the levels, it's been producing 1,000 ounces per vertical metre. And in mining, that's sort of a magic number. That's a profitable mine within a tightly constrained. There's a lot of gold there. And if we put in the modern operation, there's your production increase. If the grade goes up because we're not mining remnants and we're mining primary ore, then that's a double win for us. And on that basis, we're going to actually have I think, a very bright future. 80% of our costs are fixed. So
Okay.
every extra ounce we get beyond a certain point, we can convert into that. That tends to go to the bottom line.
When you say 80% are fixed, so what are the 20% that are not fixed? I'm just curious.
Oh, well, that would be probably, labour. We have to increase our trucking costs, things like that. But we have a minimum base load of staff. So, for example, at the processing plant, we've got 14 people on staff. If we were to double the production rate, we'd probably only have to bring on another 2 to 4 more people, something like that.
And that's because of all the upgrades that you've done to that processing plant. Is that now good to go? Do you need to spend any more money on that processing plant, or is it all up to speed now?
Well, there's always money to spend on processing plants. There's always sustaining capital, things like that. But right now we're not spending any money on it. It's been running beautifully. We get 96, 97% recovery routinely from the ore. So it's a good operation that's very well run. We've got some really fabulous staff who operate that really well, overly qualified almost for the role, but it's such a lovely lifestyle setting. Rather than a fly in, fly out, you can live in Bendigo and commute every day. It's only a 25-minute drive to Maldon.
All right. So we're running out of time. Just if you could wrap it up for me, Jonathan, and just let us know what you think the 3 top reasons people should be sitting up and taking notice of Kaiser Reef right now. Apart from the fact that you haven't been marketing at all, you've been busy getting, I guess, the slabs ready, if you like, the solid foundation. But what are 3 reasons they should be sitting up right now and taking notice?
I think the probably the number one reason would be that we've actually now invested all this capital to get to a certain point where as you said, we've got a tight capital structure. We're a $30 million company. You couldn't replace our mill for that. The decline at Maldon probably would cost more than that. But we're about to start accessing and making some good money out of A1. That's the company's plan. And that alone should justify, in my opinion, a much higher valuation than we are currently trading at. And then we have a beautiful pipeline to step into the Maldon operation and bring that online, and all covered by granted mining licenses. So that's a really critical thing these days.
Oh, good.
It's a long journey. It took us over 3 years to get an exploration license granted. To convert to a mining license is a much longer journey these days, and we've got that as a starting point. We've got the infrastructure. When people buy into a gold mine, they don't think by the time this mine's in operation, the company's going to have raised $100 million to build a processing plant, and it's going to take 3 years before it's commissioned and operating. They've got to strip the ore bodies, all that capital. No one really thinks about that, but in this case, that's all been spent. We just have to do some drilling, prove it up, get into production. So it's a really lovely low capex entry. We do aim to minimise dilution.
I said we were going to finish up. You just said something then to get into production, but aren't you still producing gold from the remnant mining, or is that all finished now?
No, that's operating right now, and going very well, very, very strongly. As of this week, we've just opened up a new lode called the Kaiser Reef, and it looks fabulous. So we're pretty excited. So we are keeping the operations going, and we just have much bigger plans. So when I say bringing on new mine, I'm talking about Maldon. That will be a new mine for us.
Fantastic. All right, ladies and gentlemen, there you heard it on Making Money Matter first. 30 mil market cap. You could not replace the processing plant for that. They are the only ASX listed company which is a operating gold mine in Victoria. They've ticked a lot of boxes. And as Jonathan said, they haven't been out on the hustings, because what he's been doing is he's been making sure to tick all those boxes. They've just done the capital raising with Ragnar Metals. That was a smart move as well for all shareholders. And I love the fact that board and management also have just under 5% ownership. So they're in lockstep with shareholders as well. As I said at the start, The ASX code is KAU, Kaiser Reef. Check them out. Call up Jonathan, annoy him, and we may even see if we can get to talk to him again later this year. But for now, Jonathan, great to see you. We'll talk to you again very soon.
Thank you very much, Kerry. Bye-bye.